Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for Thursday, August 8th, 2019. Lots to cover today, so let's start out with the 60-minute charts and where we closed. We'll loop back earlier in the week. On Monday, I mentioned the markets had hit some significant support levels where a bounce was likely. Went over that recently. 200-day EMAs on all the indexes, the major indexes, that is. All the market-leading stocks, everyone that I covered, had fallen to a key support level. So, we were near-term oversold, and actually oversold on the daily, and so the charts indicated a bounce. I followed up with these charts showing you the potential bounce target zone. That was all the way up here, anywhere when favoring a backfill of the gaps. The top of the gap was right here when that dotted line was. That was the day before we closed with the gap down. So anyways, the uppermost bounce target for that range, 188.37 on QQQ. Let's take a look at the QQQ chart right now, 60-minute chart. We hit a high today of 188.32. So far I was a mere, what is that, 5 cents off. Which, of course, I'm half kidding around. That's close enough when you get to a level like that. So for all intents and purposes, that's it. So stuck to my plan and added my final lots. What I care to be short for the next leg down if it's going to come. And as I said, there's a couple questions on the site today, but let me address this. Somebody asked a question: if we go above 188.37, do we go bullish? It's a great question, but no. These things aren't black or white. There's not a switch you flip where if you cross one level, all of a sudden everything's bullish. What it does tell me is the bounce has exceeded my expectations for how far it would go. And therefore, as per my plan, I will not dig myself into a hole in case this proves to be just a one-off event. The big drop here. So I'll hold tight, and as we go up, as my plan was before, and remain to scale in from this level to the gaps all the way up here, pretty much in these three lots at these levels, but not above there. I'll do the same thing in reverse, is just set stop, scale out. So my average cost is somewhere here in the middle on the shorts that I recycle back into. So if you look at it this way, you're talking even allowing a 2-3% stop all the way up to this trend line. I mean, these trend lines I pointed out before. I had them on the futures. They're very significant. That would be, it's not my max bounce target anymore. That's where I expected the bounce to go. That would be where things start to change for me. If we pop the downtrend lines off the highs, that will most likely, if we pop these downtrend lines, they come off the highs. That will most likely open the door for new highs. Plus, remember, there's some big levels on SPY. I'll get to that in a second as well. Some other things we'll watch. So that's it. That's where we're at on QQQ. Let's see about SPY today. SPY closed at 293.54 after hitting a high of 293.56. So almost there, and you can see that was my upper bounce target at 293.99. On a 300-point security, you're talking a few dimes. That's statistically insignificant. So that's basically a tag of that level. And from here, same story. That's my expectation is we reverse from here. There's that downtrend line off the highs in SPY, so we'll watch that. Again, so just to kind of clarify it, if anybody's new to my analysis over the last week or so, this was my expected bounce target zone from the bottom of the gap up to that 294-ish level. And that's where, I scaled back in after covering the shorts on the initial, good part of them on the initial swing down, especially the active trading account going to long to game up the bounce, then scale back out and reverse back into shorts. And then this is where I will start to reduce. I'll have a stop a little bit above, but I will definitely be out of all swing shorts if and when that level goes, especially goes with conviction. So what was that, 293.99? Let's look at that post again. Let's go to right here. So that was QQQ, and on the same day, there's my target right there. Had us going up to as high as 293.99 or so, 294 we'll call it. In reversing anywhere from as shallow as that bottom of the gap. So that's where we're at. There's those downtrend lines, and let's take a look at. So much to cover. Let's zoom out to the daily charts, and then I want to show you guys one thing that I posted on the site today earlier. Let's go to the daily charts and remember that talking just going back a few weeks ago here, not even, yeah, this drop happened quick. The big level to me all along was 294 on SPY. I'm not hitting it there. Let me just put the trend lines back on. It's already marked there, 294. And if you recall, the reason for that is that was that previous breakout to new all-time highs. We took out the previous highs after 3 failed attempts to do so, and so we fell below it. And as I like to say in technical analysis, support once broken becomes resistance. So despite today's rally, and in fact, I'm going to get to that in a second and talk about how this was so far, and it can be built upon. But right now, it is not just unusual, the strength of this. It would have been unusual not to see a rally like this after such a sharp drop. I stated that earlier. In today's video I did earlier, that the biggest gains in the market, the biggest single day gains in the stock market, almost always come during a correction or bear market. They do not come during rallies and strong trends. So just keep that in mind. And there was an article in the Wall Street Journal today I covered in the first video that actually talked about that as well. And what that article said is we had, for example, they talked about 3% down days. We had a couple of those recently, or at least one the other day on, what was it, Monday. And they said, they went back looking at statistics, and they said, for example, you go back the last 4 years, since 2010, 4 out of those 5 years, anytime you had a 3% drop, there were more to come, more that followed. So they say those come in clusters. There was only one instance where you had a 3% drop in the markets that was not followed up that year by another one. So that's what that article said, and that's where these big candles come from, and again, that's where the big bounces come from. So to wrap up here on the daily chart, again, I showed you 60-minute levels, but what I have here, what's technically significant, is this uptrend line right there on SPY. Perfect back test at the close today, just shy of the 294. So look, anything's possible, and I'll maintain this. If the bulls can pop these levels and take out the downtrend lines off the highs, that's quite bullish, especially on a closing basis. Intraday doesn't matter much if they pop it. It's how you close. So I see a kickback rally that ran into a confluence of significant resistance levels. Let's loop back to that 60-minute chart. You can see, and I covered these the other day, I have Fibonacci retracements on the drop. This move from the top to the bottom, these are the fibs over here. This one's buried under there. You can't see it. There it is, 61.8 fib. That's just a hair above my 294-ish report. So you have Fibonacci resistance, loop back to QQQ 60-minute chart. We're just a hair above the 50% fib retracement, but right on that price support that I had. And then let's look at the QQQ daily chart and see what we can find there. So QQQ, remember, the stronger the index is leading up to the highs. This has always been the leading index throughout the bull market. And that's more of a function. It's not a very diversified index. It's very tech heavy. More than half the components are technology, lacking a lot of diversified sectors like financials. You're going to have financials, and I believe utilities, so things like that. So as I always say, QQQ, I like to trade it because the tech stocks have the more bang for your buck up and down, but it's not representative of the entire stock market, and as such it moves up and down more. And since it was the leader, when it corrected, we fell right back to the uptrend line right there, had a reaction. And again, the levels show better on the 60-minute charts. There's our bounce right back to resistance there. Okay, now here's the post I made today on the site. Did this earlier today, so that's been updated. I'll update it now, but here's what I wrote. I said, QQQ, putting today's rally into perspective. I've been doing this long enough, and I'm sure a lot of you have been around at least through that last quarter correction. So, what I said is, for those that are new to trading and figured this rally was just too darn strong, and I've seen some comments already about how strong it was, and the bear case is dead and all that. Anyone that thinks it was just too strong to indicate anything less than the recent correction is over, and it was a great buying up, and the market's going to new highs, I said, let me put things into perspective for you and show you how this works. All right, so here's the last drop. The closest thing we've had in years to this impulsive drop right here, and I gave you the stats in that post. I think this was 8.5% from high to low over, I'm going from memory, I think 6 trading sessions off the highs. 1, 2, 3, 4, 5, 6. Yeah, 6 trading sessions we dropped 8.5%. from right here back in October, and that marked a major top in the market. That was, I believe, 10 trading sessions, or 9, no, 10 trading sessions, and the drop was 10.5%. This drop here. Okay, so what happened after the initial leg down? As I said earlier today, and the Wall Street Journal in their article confirmed it, most corrections don't end like this. It's possible, but and anything's possible, but they usually don't end like this. At most, you get an ABC, and I talked about that before. So what I showed you here in this I took the measurements here. You can see how the first counter trend bounce developed. You get, first there's price stabilization after a big drop, and there's usually one big final red candle. That's called a selling climax. This one had a little one after, but then the reversal that day. Then you start coming up, and shorts are a little concerned, bulls are a little concerned, but finally you move up enough, and there's a what I call a near-term buying climax, and it's evident in a big green candle, and there it was. So we had on that day, that was October 16th. The market closed up 2.91%. From the lows for the previous close up to the highs that day was 3.16, but we closed the day up 2.91, and you can see that candle here. I'll zoom in on the YouTube video for you guys. You can also check it out on rightsideofthechart.com. I don't believe this was restricted content. There it is. There's the big green candle. We closed about right at there the next day, and then boom. From there, we dropped. Over the next 9 trading sessions, we fell almost 10%. You can see that. And you all remember what happened. If you've been trading, you probably know what happened last quarter. Okay, so it happened again. So we have a correction. Remember, nothing goes down forever. You get that rubber band gets stretched, like I talk about, meaning oversold. It's going to snap back. This was a big rally. I'll measure it out in a minute if you want. I believe, if I recall, it was about 10% or close to it. Or one of these they were double digits and close to it. So the snapback rallies are big. But then how do they end? Take a look. See that big green candle? That is indicative. That's a buying climax. And I wrote about it under this post. Maybe I'll get to that in a minute, but I just want to point out that was another 3.1% gain. So if you were trading that day, these, remember, they were bigger than what we had today. Let's just go back to today. We had a QQQ closed up. We closed right around the highs, so we'll call it 2.2. We're a little bit off there. So those 2 kickback rallies from last quarter, right here and here, they weren't even, they were actually larger than what we just had now. So, if this, all I'm trying to get to, if it feels super bullish, if you think there's no way the market can rally so hard, if we're not going to continue up, I just want to say that is, again, indicative of what you get at these tops, these type of, especially during a, downtrend where you've had a lot. Doesn't mean that it must play out that way. Doesn't mean that this isn't to start anything more. Just wanted to point out again, that's very, very indicative. Like here's another one right there. You get that big green candle, and that's buyer exhaustion. And what it is here, I'll show you what I talked about in here. At the bottom of that post, putting it to perspective, what I went on to say down here, and you can check this out in the comments section, that there's several things that happen. What happens is shorts that came late into the game that wanted to short on Monday after the market's already dropped 7-8%. That's not an objective time to short, and I made that clear on the site then. As I was covering in short positions going long, it's just not objective. And so what happens is those that came in late, or maybe even some that held shorts all the way down, they're starting to get squeezed out. But anybody, you can just look at the charts. It's not rocket science, and look at this and say that anybody that shorted on Monday, anywhere, even if you shorted the highs, you're underwater, and you're underwater by a pretty good amount. So what happens is, this is a natural cycle. This is how the markets work. Once you pop these stops, the more you go up, the short squeeze, it's a vicious cycle. Shorts get squeezed, some are getting margin calls, some are just feeling the pain, their stops are getting hit. And remember, if you're a short a stock, when you close a position, you're buying the stock, you're buying to cover. You sell short and you buy to cover. So that buying, just like a regular natural buying from a long, somebody going long, it creates additional upside on the stock. The more buying you have, the more the price is going to go up on the stock. The more it goes up, the more shorts are going to get squeezed and they cover. And then on top of that, there's the other component I wrote in there. You also have the dip buyers come in. They didn't want to buy on Monday, They didn't want to buy on Tuesday, but they saw after Wednesday the market was stabilizing. Then we started to enter the gap. They become emboldened, and you know, as they should, because it's like Pavlov's dogs. You know, in a bull market, dip buyers get rewarded. Sometimes they get burned buying the dips, like they did back in this fourth quarter. But so far this year, in 2018. Yeah, they got burned on this one, but eventually they got it right. And you know, the more the market does that, the more they'll step in. So, look, I can't tell you for sure where we're going from here, but I can tell you that on a scale 1 to 10, today was about a 10 for an objective shorting op right here, if you weren't already short. Or now if you're long and you, let me give you some advice for the bulls, and you stepped in here anywhere, or you rode out, let's say you rode this out and you were wishing like anything on Monday that you had sold earlier, and now you're a little concerned because that shot across the bow. Here's what I can tell you right now with a pretty good degree of confidence. At this point in time, those recent highs, the bottom of the gap right there, remember we just popped into it slightly yesterday. That was a very significant resistance level. Remember, we traded around that for days. Look at this. We had this W-type pattern almost right there, but see multiple failures finally once we entered the gap. So where I'm going with this for both shorts and longs, if you are long, you should consider a stop not too far below there, because if they wipe out this candle, if within the next few days, next few trading sessions, tomorrow's Friday, so we'll have to maybe carry into next week, there could be a little more upside here, but if that candle gets wiped out anytime soon, especially down below this what was a very important support level broken, now or resistance, now broken becomes support, that's the level. That should be the big level where if we break that, we're going to probably have the next wave down. All the longs that bought will be stopped out. The shorts that got squeezed out today are going to curse themselves for allowing that to happen, and they're going to want back in, and they're going to start shorting. So in the same way buying begets more buying on the way up, selling will also become, you know, a vicious cycle. The more stops on longs that get hit, they sell. And then the more shorts that pile in, and that'll cause the next leg down. So that is, keep it very simple. It's still my preferred scenario. Nothing's changed. But from here on, with every tick we go higher from where we close today, things start to change. But as I said earlier, it's not a hard all or none kind of change where, to me, all of a sudden, you know, over today's highs, bullish, and we're going, you know, 15%, 20% higher in the market. It's not that easy. Like I said, there are some additional resistance levels ahead, and that's just the level that I foresaw, you know, would be a likely bounce target based on, you know, doing this long enough and Fibonacci projections and, you know, the support levels that we hit. The fact that this is the initial leg down, usually in a correction, the big corrections, you know, that first leg down, you never melt down. I've never that I can ever recall the markets peaking at an all-time high like they just did and then having just a meltdown straight from there without any counter trend rallies. No, the first wave down, the dip buyers come in. The second wave down, and I talked about this at the time, the dip buyers come in again. Then they start, this is where I called it back then, if you recall, the WTF moment, where they start saying, you know, what the fudge, what's going on? You know, I've been buying these dips, it's been working. At this point, they gave up. They realized something was different this time around. It wasn't like it had been for quite some time, where you can step in and buy all the dips and be rewarded. So right now, like I said, pretty bullish, you know, not a all or none, but bullish if we go much higher. And it's incremental as well. Same thing to the downside, and especially if we cut under those gaps right there, that should open what I believe to would be waterfall type or very impulsive selling, and quickly undercut those lows. I don't think if we get much below those gaps and wipe out today's candles, I don't think we'll even hiccup at the recent lows. We'll probably, in my opinion, smash right through them. Okay, and we'll wrap this up with the futures. The same day I posted the bounce targets on the QQQ and SPY, which I just showed you, which were now hit. I gave you the same thing, members of the site, my uppermost bounce targets for the futures. NQ, this yellow box was my range, had it going up here to the high end of my range at 77, 22, 25. We'll call that, it says 26, but it's just a charting program. Q's trade in increments of quarter points. So 77.22, and let's pull up the current chart. And you can see we hit it almost perfectly, just a hair above it, close enough, you know, on a move like that. 77.2226 was my target there. We are at, so, and that includes a little drift up in after hours. So we essentially parked, just like QQQ, we parked, closed it right on my uppermost bounce targets today. You probably saw earlier, if I didn't show you that or pointed out, I had a trend line here. Was it on QQQ? Yeah, I can add it on QQQ as well. You guys can add these minor uptrend lines right there. Let's tighten it up a little. This is a 60-minute chart of QQQ. So that's something to watch as well. There's an uptrend line, and I had it on SPY as well in the 60-minute chart. So these are things that you might look, you know, because in technical analysis or trading, you either short a bounce back to resistance or break a support. So right now you had the objective short at resistance with the net with a sell signal to come. That's not a sell signal because the trend is up. It's just an objective shorting level. Sell signal would come on a break of this uptrend line. And then back to the futures. There's a similar uptrend line right there you can replicate, and that, you know, that probably might go in the overnight session too. If you're a futures trader, maybe Sunday night or tomorrow or something, you can maybe get a heads up on it. But as of now, the trend is up, and you can see there's some additional levels, resistance levels overhead. This is that trend line I was talking off the highs. This was that golden shorting op back on the back test right after the FOMC announcement, day after, and I posted at the time, and the indexes were back testing the their wedges they broke down, and that was the last and best chance, the best shorting op of the year so far, in fact. So congrats to those that caught it and milked a good part of that run down, especially if you reversed and, you know, covered or at least took some profits there, and you recycle back in here. That would be a really nice trade. So we'll see where we go from there. Let's look at ES and we'll wrap it up. Okay, ES, my bounce target range from earlier in the week was the uppermost was 29.35.72, so that's 29.35.75. Let's see where we're at here. 29.30, that's it. We hit it again, just like NQ. You can see, and they remember futures, as I said, drifted a little higher after the bell today, so that's almost a perfect tag of the uppermost bounce target zone, and that's that. And so if we, like I said, from this point on, I don't believe it's objective to add, at least not, you know, that was my plan, scaling up to, but not above this point. And then, like I said, there's still work to be done. That big 294 level on SPY as well, and you can see here on ES, you get some resistance coming up here, and that downtrend line as well. So should we happen to go higher, you know, I'll just watch, and you know, we start to go above there. That's where I start to get out. But at this point in time, that's what I favor. But you know, it'll help to get a sell signal. I can't draw as good a trend line here on ES as I showed you on QQQ and NQ. And then finally, more of a secondary or tertiary index, but for you small cap traders, RTY also gives targets. There was my bounce zone back then, a little wider, and I didn't have all the levels in between, the midpoint level like I did on ES and NQ, QQQ and SPY, but I had us going up anywhere in this range up to about 1547 or so. That was then. This is now, if I can find it here. All these charts got down below. RTY, here we go. So that's it. We're pretty much smack in the middle. But again, the large caps are going to lead the market, QQQ and SPY, and so they're at the uppermost targets, and that's more significant resistance. But if you're an RTY trader, which again is a small cap Russell 2000 futures, that's a pretty good level there. If you get there and you've been swinging this up and you're looking to take some profits, let's say in the overnight session tonight or tomorrow or anytime soon, if it gets hit, that's certainly a level that may come into play right there for you. Otherwise, I would suspect if the markets reverse, you know, large caps reverse here at resistance where they close, they'll probably bring the small caps down with them. So, all right, let's wrap it up here, and we'll pick it up tomorrow and see where we go from there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.